that's the flip side. When you bring an activist into your stock, things could go the other way. In this case, it seems like things are friendly and it won't go to a proxy fight or anything like that. But that is a risk when you have an activist in your shares.
Yes, and also saying in an email statement that it doesn't comment on specific conversations with an individual. The board of directors and management team would regularly engage with shareholders on a range of issues. Anna Baker with all the news on the latest. Meanwhile, let's talk about the bond market. JP Morgan has kicked off that sale of $8 billion in junk debt to fund the record leverage buyout of electronic arts. That's according to Source. And JP Morgan earlier amended the EA buyout debt package, increasing the size of a US dollar loan offering by $1 billion, while trimming back the bond sale by the same amount. And what we got.
Okay, coming up, we're going to speak with Cato Network CEO Shlomo Kramer about their latest innovations in cybersecurity amid growing geopolitical threats. There's a lot to do with Iran and in cyberspace. This is Bloomberg Tech. The RSA conference kicks off this week right here in San Francisco, bringing together thousands of cybersecurity leaders and policymakers amid rising global tensions and digital threats. Cato Networks is among the companies attending, and CEO Shlomo Kramer joins us now. And frankly, and I think obviously, what is happening with the war in Iran will be discussed by you and your colleagues. You know, Iran poses at a nation state level a cyber threat to this country, the United States. What are you seeing? What are you hearing? And what are you talking about with colleagues this week?
So obviously, the cyber threat from Iran and other adversaries is serious. But imagine a room full of Iranian cyber warriors, and then transfer that an army to an agentic army of AI agents.
You're saying that Iran has competence in that domain.
Saying that the future delivers a much more radically dangerous threat landscape than what the present says through the AI transformation.
I think about what Cato does, and I'm trying to summarize it for everyday people that might not know. Instead of having a box on your premises in terms of networks and your own firewall and your own VPN, you just offer a cloud-based solution for all of it.
Exactly. It's a cloud-based solution, and think of blockbusters moving to Netflix.
So if an enterprise or company of any size in this country does face a threat from Iran or any other threat actor, what's the benefit of going through that technology?
You don't need to be technologists. You just connect to the cloud network. Very simple, through an agent or a small box, and you are protected wherever you are, wherever your applications are, wherever your critical assets are, in minutes.
Of course, you're an Israeli-based company, and we hope that colleagues are safe at Cato Networks. But I'm interested as to what, Shlomo, is happening at the moment when you mention an agent. Now, before the Iran war erupted, and we focused on that conflict, of course, from a humanitarian perspective, we also were thinking about the market impact before this of software being disrupted by generative AI, of the latest plugins suddenly sending cybersecurity stocks lower. How have you seen and digested that move in the market?
This is a very good question. Thank you for asking it. AI, like any other technology revolution, and this is perhaps the biggest in my life, has beneath it a set of technologies and capabilities that are required, that are enablers to this technology. Like in the case of AI, compute, energy, and cyber. Cyber is essential for the enterprise to consume AI, because without security, enterprises will not consume it. Above that layer of technology, there are the winners, there are the neutrals, and there are the long tails of this new AI technology. And obviously, this is exactly where investors do not know how the card will reshuffle itself, and are very hesitant in terms of investing. I would call it almost a freeze.
Yeah.
But in that sense, cyber is absolutely a winner, and that goes back to my previous comment about the warriors of cyber versus an army of agentic attackers. The threat landscape based on AI is going to change dramatically and for the worse. So cyber is key in addressing that threat and is going to be, unfortunately, a huge beneficiary from that transformation.
Unfortunately or fortunately, if you happen to be a CEO of a Cato Networks and it's currently privately funded, you might be looking at public markets. At what point, Shlomo, do you think you will, to beef up the business, continue to grow, will need to turn to broader investment areas?
So we are, as a growth company, continue to invest heavily in our growth, and we will, consider all options, both private and public funding, in order to continue to drive this. We are in the very early in the cycle of this category of network security. It's called SASE. I didn't invent the name. And a decade from now, this is going to make Cato the largest leader in modern network security.
SASE, Secure Access Service, Edge, which basically, again, I'm trying to make it digestible, but you combine firewall, threat protection, secure gateways, everything into one single cloud-based platform. Can I ask you this? This week in RSA, let's put geopolitics to one side and threat level. What's the threat within industry on who's innovating and using competence in artificial intelligence to add value to their products? Like, who is it that you look at and go, wow, they're doing really good things?
So the key to answer this question is, who is using AI in order to fight AI? Who is implementing AI capability? Because that is the only way to fend off this army.
Agentic swarm defense against agentic swarm offense.
Exactly. All right. And companies such as Cato. But many other companies are already have been using AI for many years, now doubling down on that. And there are companies that not. And that is going to determine the winners from the
Shlomo Kramer, Cato Networks CEO, here with us in San Francisco, in town for RSA this week. Karen, plenty more headlines about.
There is, and it's time now for Talking Tech. And first up, a comeback concert by K-pop group BTS drew a smaller crowd than expected. Now that led the shares of the agency that represents them, who then just declined since 2022. Look, the group's turn after a 4-year hiatus. Despite acquisitions of labels from Hollywood to Latin America, that's sluggish profit growth due to BTS's time on the sidelines. Plus Sony, well, it's nearing a $1 billion deal to sell a majority stake in its home entertainment business to Chinese rival PCL, as per the sources. The company's announced an agreement in January for a home entertainment joint venture that includes Sony's Bravia television brand. And company with AI has raised $25 million from investors, including Maverick Silicon, SoftBank, and Synopsys. Now, the company's CEO, that's Srijan Weaver, is former Goldman Sachs managing director. He had pivoted the startup towards AI infrastructure since taking over last year.
Sticking with chips, tune in to the close tomorrow afternoon for a conversation with Rene Haas, ARM CEO. That's at 3:30 p.m. in New York, 12:30 p.m. Pacific time. All right, coming up, we're going to speak with Mitchell Green of Lead Edge Capital after the closing of its Fund 7 with $3.5 billion in commits. What's next? This is Bloomberg Tech. Lead Edge Capital has announced the closing of its Fund 7 with $3.5 billion in commitments, bringing its total capital raise since inception to $9 billion. Here to discuss is Lead Edge Capital founder and managing partner, Mitchell Green. And it's great to have you back on the show. Let's just start with the basics. $3.5 billion for Fund 7, what the intention is, the strategy, the thesis in how you deploy out of this fund.
Sure. Well, Ed, Karen, thanks so much for having me on. Thesis continues to be the same. It's been, in funds 3, 4, 5, 6, 7. This will just be a continuation of, what we're already doing. And we have a very specific framework, which we call the Lead Edge 8, which is certain financial criteria. Are you 10 million plus in revenue, or you're growing 25% plus a year? we'll continue to do that across the life cycle of different types of, literally we can lead a primary round, put money on the balance sheet of a company. We can buy out early investors or early employees. We can fund a continuation vehicle from an investor that needs to get out. We can buy an entire company in a buyout. It's really like the full life cycle. And then actually we also invest in some companies when they're public as well.
The rules-based approach is very interesting, whether you call it venture capital or private growth equity, because I'm curious how it works in practice. So if you're saying, okay, we only invest in companies that reach these criteria, do you find them or do they find you?
It's a great question. So the way we've always sourced, and it's the way the three of us who run the firms, our backgrounds, or investment venture partners and insight. So we have a team of about 18, 22 to 24-year-olds that pick up the phone and call companies all day long. Some, gone are kind of the days of cold calling company or actually leaving voicemails. But, our team of, 18, 22 to 24-year-olds, think of these people as a lot of like former college athletes, people that were debaters, people that were entrepreneurs. We want people that are really persistent because the great company doesn't call you back right away. You sometimes call that CEO half dozen times before they call you back.
Right.
But again, we'll speak to about 9,000 companies a year. And if I said you had to meet all 8 criteria, it'd only be about 90 or 1%. But we say that if you meet at least 5, it's about a 10% yield. So out of 9,000 companies, 900 meet 5 or more criteria. Due diligence on 150 to do 5 to 7 deals a year.
Mitchell, I can't help but feel that those ex-college athletes and those 22 to 24-year-olds are going to be very well helped or maybe disrupted by agentic AI. And I want to hear your play on the whole software investment thesis, because this is what caught my attention.
Her heels on the ground for a downward facing dog. Shot on the.
And they want a delectable squeeze up? You'll know.
Deliciously delectables.
Squeeze up.
Hey, killing some time? Why not listen to the Project Hail Mary audiobook on Audible? It's a truly epic piece of sci-fi. And if you love the audiobook, good news. The movie is in theaters starring Ryan Gosling. Check them both out. I'll wait here.
You wash your whole body every day, so why don't you wash your whole mouth? Listerine and wash your mouth.
Style and substance. In the GMC Sierra, we'll get a total value of over 11,500 on this Sierra 1500 model when you trade in an eligible vehicle.
Thing is again, somebody has as long as the person that works at the edge, a 22 to 24-year-old, is on the other end of a phone talking to another human being like a CEO or CFO of a company, human to human interaction is still really, really important. However, where AI can be really helpful now is, and where I did this, the three of us who run the firm all started our career doing this 15, 20 plus years ago. And, today, an analyst or an associate cold calling companies can use AI to be a lot more educated when talking to an entrepreneur. They can have done a bunch of research that would have taken a couple hours before, and they can do it in 5 minutes. You can check our Claude. They can look up all the competitors. They can get the value prop. They can ask, what do you think the right questions to ask are? So actually, AI, it can help you find more. You say, hey, I just spoke to ABC company, like Toast in the restaurant point of sale system. Give me all the competitors so I can then call them as well. So it actually makes the analyst and associates even more powerful.
And Mitchell, how many, therefore, of the calls do you think will still be going to software companies that have been beaten up that you think still look attractive? Because that has been the narrative that agentic AI is coming to eat their lunch, and therefore they're going to see significant pressure on their ARRs and their future growth.
For us, it's always been about, software is a very broad word, right? There's lots of different types of software companies. Just like if you say, I'm going to Europe, lots of places in Europe, you can be like, oh, in Europe it rains. No, but some places, a lot of places in Europe it doesn't rain. So for us, like software, so we're looking for companies. We always look for companies that have like very high gross dollar retention. Now again, you might say, well, AI is going to change all that. Well, then you're looking for software companies that have a moat, that own the data, that are systems of record, that tend to sell to large enterprises. You could have if you have people out here from most banks don't even allow their employees to access AI for their systems. Big enterprises, when they buy software, want security. You've been able to buy open source software for decades. Yet companies like Elastic and Grafana and Red Hat exist at enterprise level on top of what was already free software. And I think you're going to continue.
After raising $2 billion in a recent round, which now values the company at a cool $14.6 billion. We're also looking to this particular company because they want to be looking for more compute, but also they've got some significant leaders coming in, directors, including a British politician, Nick Clegg, Sheryl Sandberg as well, longtime chief operating officer at Facebook and its parent Meta. Welcome the leadership now, and some Enscale. And just
automated drug discovery, the extension of human life, compute.
The story starts with his part, which is
So thinking about how I build the next great AI platform, time to get an introduction to Cheryl. And
over the next few weeks, as he was trying to get me to consider joining the board, he went away and he wrote a letter to his team. And the only person I'd ever seen write like that was Mark Zuckerberg. This combination of a relentless desire for great, relentless desire for execution. From my point of view, I joined Google when it was at 250 people, left at 20,000. I joined Facebook when it was 550 people, left, almost 100,000. So the opportunity to work with founder I believe in, I joined right as the company was about 300, 400 people, so that same spot, and try to take some of the lessons we've learned and help a company I believe in this much scale really matters. I also really believe in the power of AI. I think we're at the very beginning. I started my career in global health. AI is going to mean that anyone in a remote village anywhere in the world could get skin cancer diagnosed at the same efficacy rate as someone in the Mayo Clinic. But that is going to take a build out of infrastructure and compute. And I really believe in Josh and Enscale's ability to do that. So I'm happy to be here.
Josh, the term neocloud has actually also become quite broad. When I talk to people about Enscale, they say, well, Enscale is modular. How do you set yourselves apart from the other neoclouds out there? Many of whom come on this program and make quite similar pitches.
Yeah. So I think the key distinction with Enscale is we are fully vertically integrated. Again, if you think about the challenge for the sector, it's actually landing the infrastructure on the ground and getting it plugged in. And the true scarcity, given the demand in the sector, is the land, the power, and then the chips. And so, by and large, the neocloud sector is not really vertically integrated in that they don't own their own land and power. Enscale does. We own the land and power, we own the chips, and we own the software, delivering an end-to-end service to the counterparty. In addition, we recently acquired a company called American Intelligence Corporation in West Virginia, which adds an even further segment to that, which is the ownership of the power. This is a behind-the-meter site, which means that we're effectively taking natural gas and producing our own energy, which means it's not connected to the local grid and therefore subject to any kind of price increases for consumers.
Cheryl, it's great to have you back on Bloomberg Television and on Bloomberg Tech. You said I don't do boards historically. with this role with Enscale, I think a lot of people are really interested if you go back to being an operator. With time, if you would join the executive ranks at Enscale, and whether you do or don't, the kind of operationally how you can help the company grow.
So I've joined as both a board member as an advisor. I'm spending real time with Josh and his team. I have no plans to go on board full time. They have an incredible exec team. And my goal is to help them scale, help figure out how we structure, how we do corporate governance, recruit some other great board members. Nick Clegg, you mentioned, joining the board with me. Sue Decker, who is decades of experience chairing audit committees and in the financial world, and work with them to really scale their company. What I see in Josh is two things. Is real ambition, like real ambition to make a difference in how the AI build up happens. Make it sustainable, make it clean, commitment to local jobs as we scale and build, but also a commitment to excellence, to hiring the best people, to getting people into the right jobs, to structuring so that we can really execute. And it already has been a great pleasure to work this closely with someone to believe in. And also, Caroline, I know you always care about this, a really strong team of senior women. Head of AI infrastructure, CFO, head of security, Josh before me, hired who he considers the best people, and a lot of great women in those jobs.
I love that because it's something I'm passionate about, something that you spend your career advocating for, Cheryl, is diversity within the ranks of talent, but also you're advocating for clean energy. And I noticed you've got one other board seat with Terradot, and that is about carbon neutrality. So Josh, I ask you, what about carbon neutrality for West Virginia? Because that's about the actual gas. How do you think about that in the longer term?
Yeah, sure. So broadly, the company thesis is to take sustainability and convert it into intelligence. So we first do this in the north of Norway. So we operate in the north of Norway. The north of Norway has such a large oversupply of energy due to basically the seasons. Effectively, during the winter, all of the glaciers melt over. And then in the summer, they all melt and create enormous waterfalls. And the Norwegian government has capture that energy. But the challenge is it can't be exported. And so it's got to be consumed in region. So Nscale is building some of the largest AI infrastructure projects on the European continent in the north of Norway, taking otherwise stranded energy and converting it to intelligence. The same goes for our projects in Texas, as an example. In Texas, you've got a similar oversupply of renewables and other energy, but it's in remote locations. So we're building some of the largest infrastructure projects in North America in this location in order to convert that to intelligence. Now, in West Virginia, we're doing the same thing, but slightly different. In West Virginia, we're producing our own energy. One of the challenges with the North American grid is constraint. And so we felt that producing our own energy with natural gas generators, i.e. behind the meter, was the best way to scale sustainably, but also not impact local prices and the grid.
Cheryl, you're very used to being inside companies that are just truly global, right? I'm listening to what Josh is saying. Nscale gets a lot of credit because it's kind of a leader in Europe. It is a footprint in the United Kingdom, but we've just been talking about America. How much do you want Josh? I know he's sitting next to you to shift gears a little bit and move this company and himself to the US. Do you want him to focus on the Middle East, where there is the capital, there is the will, there is energy supply, for example?
Well, I'll let him answer that, but certainly this is global, right? This is a global company started in London and continuing to expand all over the world.
Yeah, so I mean, today we're operating in 5 countries. We have plans for 15. Naturally, North America is the center of the universe for artificial intelligence, both with startups, with larger customers, with access to capital. And so naturally, I spend a lot of my time here. But as Cheryl said, this is a global market, and I'm spending most of my time on a plane as a result.
That's a very familiar tale that your peers and follow us on this program too. Nscale CEO Josh Payne, Nscale board member and advisor Sheryl Sandberg. It's great to have you both on the program. That does it for this edition of Bloomberg Tech. Tune in tomorrow for a special edition of the show, live from the Hilton Valley Forum in Washington, D.C. We'll sit down with some of the biggest names in government, industry, and technology. Karen.
Don't forget to check out the podcast. You can find it on the terminal as well as online on Apple, Spotify, and iHeart. This is Bloomberg Tech.
And this is how ancient people, across 47 different spreadsheets.
Good morning. This is Horizons Middle East and Africa, our top stories this morning. President Trump says the U.S. will delay strikes on Iranian energy infrastructure after what he calls productive conversations. But direct talks have been denied by Iranian officials and state media. Oil rises, Asian stocks peer gains, and futures slide as fragile optimism around a potential de-escalation in the Middle East gives way to renewed caution. Plus, the war in Iran hangs over the CERAWeek conference in Houston, with energy bosses sharing concerns about the impact on the industry. ADNOC CEO Sultan Jabir calls Iran's weaponization of the Strait of Hormuz economic terrorism. Well, it's just gone 9 a.m. across the Emirates. I'm Dumana Bersachi in Dubai. What a 24 hours for global markets. What can I say? Whipsaw price action, a change in approach from the Trump administration. We're going to dissect it all. We're going to unpack that Truth Social post that President Trump put up yesterday, suggesting that there were discussions taking place with the Iranians. The Iranians now denying that direct discussions are taking place. However, what's become apparent from our reporting is that there are mediation efforts underway. So let's see whether this actually yields anything. But we do know, as far as markets are concerned, that the timing of U.S. Potential strikes on Iranian infrastructure has been pushed back by 5 days. So that was met by some relief in global markets yesterday. Today, though, some more cautiousness prevailing in the markets. We've got S&P futures actually leaning towards the red, down 0.6%. As it becomes increasingly clear as well that these discussions are not necessarily concrete, and at the same time, there still is a war that is ongoing. Iran is still retaliating, still firing projectiles at Gulf states, and the U.S. and Israeli joint military operations are still continuing in Iran. So the backdrop to all of this is that the war is still very much going on. Now, Brent, we've recuperated some of the losses that we saw after that headline came out. The initial reaction for oil, as you can imagine, was to drop more than double digits. At one point, we're about 14% lower on the day, but slowly creeping back up again. So net, we're probably around 4% lower than we were about 24 hours ago, still sitting at $104 though. And effectively, nothing has really changed as far as the Strait of Hormuz is concerned and ongoing potential targets to energy infrastructure and the Gulf too. So something to bear in mind there. USD getting a bit of a bid this morning, up 0.3%. So continuing to act like a safe haven, a geopolitical safe haven in these times of uncertainty about what could happen. And also the fact that the market continues to price in a higher rates interest rates path. So that's obviously having a knock-on effect to the greenback as well. And then gold, because of the higher USD, because of these higher interest rates, we are continuing to see slippage. So it's down 1.6% today. And I believe this is its longest streak of daily losses ever in history, day after day after day. It's been 10 days in a row. But let's switch over because I just want to draw your attention to some interesting volumes that went through. This is essentially the sheer number of trades, the volume of trades that went through both on S&P E-minis, so the ESA futures and WTI futures, a few minutes. So in the 15 minutes before President Trump put up that Truth Social post. And you can see from that chart that we saw a massive spike in volume into and around that post. Some suggestion that over 6,200 futures contracts, the WTI futures contracts, were traded. So that is an anomaly in terms of market price action, and that does suggest that perhaps people were looking to trade into and around those headlines. Okay, let's check in on how markets in Asia are faring. Winnie Su is in our Hong Kong studio. Winnie, walk us through the handover from Asia today. Some cautiousness, but perhaps a bit of relief also.
Yeah, morning, Jumana. As you mentioned, Asian stocks here, we are seeing pairing earlier gains, and that is a bit of a market fatigue feeding through with all these rapid developments, with all these headlines. But also, as you mentioned, investors aren't convinced that this is leading us to any significant de-escalation, especially with Iran still denying, and also Israel also continuously still attacking these facilities. You are looking at MXAP here, just up slightly more than 1%. 1%, but we are off the intraday high of an increase of 1.7%, and we are nowhere close to erasing that 3.4 decline we saw yesterday. Now, we also just want to flip the board and take a look at how these other assets are playing a role in these the pairing gains of Asian stocks. As you just mentioned, clearly we are looking at the slight gains or rebound in crude oil as well as the dollar. So that is also driving the pairing of the gains in Asian stocks and also feeding through the weakness in the FX space. You're looking at the Japanese yen here weakening by 0.2%. It's also coming after a core CPI number coming in weaker than expected. We are growing at the slowest pace since 4 years ago. So that is partly helped by the utility support from the government, but also, but overall in general, we are seeing some weakness coming through in that space. Back to you, Jemana.
Winnie, thank you so much. Winnie So in Hong Kong. Now, President Donald Trump has said the U.S. would delay strikes against Iran's energy infrastructure after what he calls productive conversations with the country's, quote, top person.
I think there's a very good chance we're going to end up in a deal. And so we're giving it 5 days, and then we're going to see where that takes us. And I would say at the end of the spirit, I think it could very well end up being a very good deal for everybody. As good as if we went all the way and just literally annihilated the place, which if we don't have to do that, that would be.
Looking for a rotation back up at the top of the hour now.
Iran's parliamentary speaker and state media tonight, these negotiations are happening, calling Trump's claim psychological warfare. Meanwhile, the Wall Street Journal is reporting that Saudi Arabia and the UAE are moving closer to taking steps to join the war. So for more, let's bring in Stuart Rosenfeld, one of the executive editor for MENA and Russia. Stuart.
4-hour candle spawn, the top of the hour. It might just leave us here. We're not planning on getting an entry. We'll pivot back to this 50% level. We'll get an entry.
Some shape or form, probably about 5.
I missed all the short opportunity this morning.
And I'm sure the numbers too, and I'm sure the number of variables has been multiplied over the last several days. And the tone of that seems to be at least half number one. If you look at some of the power stations, power plants in Iran, then you in effect end up with a failed state. And that's going to make it very hard to rebuild, in the eventuality that you get some sort of peace deal or a new regime. And number two, I'm sure a large part of those conversations has been pointing out that the retaliatory action could be absolutely devastating for the Gulf Arab nations.
Pertains to the Gulf Arab nations, there is this reporting from Wall Street Journal overnight suggesting that they are perhaps inching closer to joining in on the war. And equally, our colleagues in Vienna have written about some of the restraining influence the Gulf Arab states have had on the U.S., particularly as it pertains to infrastructure, the potential reprisal out of Iran. What do we understand is their position right now?
So, I mean, this is still a fairly long-run thing. Can you remember the GTC brought out a statement 2-3 days after
It's rejecting this level back down.
where they said that they sort of reserved the right to take retaliatory action. Since then, we've had comments from various countries then underscoring that, most of the Saudi foreign minister, but also the UAE has pointed out that, this conflict is drawing them closer into their alliance with the US, amongst others. And it's pretty clear that they are getting increasingly fed up with basically the way this war is going, and mostly around Hormuz is sort of basically the freezing upgrade. However, it's not clear at this stage what exactly that might look like, or what role they may play militarily, and what exactly the targets would be. So we're still at that stage where
It's bullish.
it's clear at the moment that we've seen visibly, publicly at least, is rhetoric. But it's clear that they are getting increasingly frustrated with
Entry here, see if we can get it.
Stuart Rosenfeld is our executive editor for MENA and Russia. Thank you. Well, as optimism around the potential de-escalation in the Middle East fades, Tara Chinana, Chief Investment Strategist at Saxo, joins us from Singapore with her market insights. Tara, It must be really difficult to trade around the headlines in this market. How can you have a view that's longer than a couple of days view, given that we seem to be all reacting to the posts that the president of the United States is putting up?
Got in the NASDAQ.
First of all, thank you for having me.
Here,
Market, which is heavily headline driven, and this volatility that we're seeing. Some statements,
break even here.
all of those.
This manipulation, I believe we can swing back up, but we have to get back above the 50% level to see if I can get another entry.
Much beyond that,
Candle.
are one energy shock to stagflation shock to the rate story, to the inflation story. So really, there have been so many angles that they've been affected because of this whole war and the content that's going on. And it's certainly been a very difficult market for a lot of investors. But if you are obviously a more active trader in the market, I think the volatility is probably also helping you in some way.
We can't stay above the 50 level. Can't get up, but I think NASDAQ is just manipulating because SPX is stronger. Missed the discount. I missed the discount. Yep. Taken out break even. Try to get another entry. If it swings back, if it pivots back, we can get an entry here.
About how to treat that as a tactical move and remain structurally aligned to whatever they've invested in, whatever they believe in. But at this time, like I said, right, this geopolitical risk premium story has become a pretty a small part of the entire story. We can see that from the price action in gold, for example. I think the way the stories really moved forward.
Again.
What kind of an inflation risk this brings to the global economy? What kind of a growth risk this brings?
No.
Central banks really high rates when inflation is supply driven. Of course, they can push back on rate cuts, but can they really hike rates and can that really solve the Hormuz trade problem, right? So all those risks have really evolved, and that is whether this can bring some levels of light stagflation, and this would not be a very global phenomenon. It affects different countries differently. Those who are obviously more excited.
Get the discount. I don't know. How can I hold this? I just gotta get out.
So this is a very segmented theory, but it has evolved beyond that geopolitical situation.
Terrible.
And the war
Don't look for the wick.
3.5. Next.
Loss on that.
This inflation shock that we're seeing isn't necessarily only going to be transitory, and that the markets need to account for a lot of secure inflation in months to come, which to a certain extent they've already started doing.
Again, yes, the rates move does suggest that this is not transitory. Of course, if we do see a quick wind down from here, in the Strait of Hormuz really returning to normal, it does seem like it may hit a risk at this point. But that could obviously make this whole inflation scare a bit exaggerated.
Enter the bear candle.
Now, I think
I was just gonna leave because I didn't hold it. So having get a good entry, it's hard to hold. Now it's leaving. Now it's going again. I cannot find the right candle to enter on. I don't want the drawdown. It's just
Your business connection.
goodness, man. You never just all I had to do is just hold that. SPX was telling us the real story here, and while NASDAQ was manipulating, if you look at SPX here, it was telling us it was higher highs, while NASDAQ was lower highs. Wait for the manipulation.
I do think there is a risk that we could see these patterns continually in some ways or the other. Given what we saw yesterday from President Trump, even if there is no direct contact, I think the base case remains that despite that strong public rhetoric that each side is trying to maintain, I think nobody wants to face the full economic consequences of this war right now. So certainly some back channels are being opened, and that does mean that the markets continue to be sideways to a little bit higher when I talk about market. The risk assets, the equity markets, I think they could at least within this week stay supported with that expectations that there are some levels of, negotiations going on. But what happens a month from now is really harder to predict. I think it really depends on where we land into the next weekend. I think a longer term horizon, AI is a story, which needs a lot of capital going in. So we're looking at investor positioning, really, I think the most interesting areas where
Just looking towards that and rotate back to upside to get fill the gap from yesterday's low. It opened gap this morning.
Likewise, also in supply chain security, we need those chips, we need those rare earths.
If I can get an inside bear close here, that would be a good entry, I believe. So
the national security, which is, defense and drones, and now also the interceptor systems and cyber security and things like that, which remain very important, to continue spending in these areas from a very long-term perspective.
Yeah, investment themes on the longer term horizon. Carrie can keep investment strategist at Saxo. Thank you so much for joining us today. But coming up, oil climbing again as the risk of a wider Middle East conflict grows. We'll
should be on a higher time frame, at least 3 to 5 minutes or so for entries, but I'm too anxious. I'm trying to be cheeky on the 60-second time frames. This is how you get wrecked. Now it's leaving.
back to Horizons Middle East and Africa. I'm 100% in Dubai.
Looking for the rotation back up after the downswing this morning. Market was down this morning for sure. A week. Even gold was weak. This was a nice trap of sellers down here. Sweep here, trap them. Right back up.
And no company should be allowed to hold foreigners hostage.
What's this?
Ever. And while we all appreciate all efforts to stabilize markets and reduce prices, let us be clear. This is not a supply issue. It is a security issue.
Might be able to get another opportunity here. Nasdaq is trying to come back to that 50 level.
Our way out of this crisis.
For more, we're now joined by Paul Goodman of Sources Head at 91. In the run-up to this war, there had been a lot of talk about the significance and importance of the Strait of Hormuz. But I think it's only now that people are beginning to realize how important it is to have control over the vessels that pass through the strait. Do you think when all this is said and done, and at some point when the war is behind us, investors are going to have to account for a higher geopolitical premium in the region simply because of the Strait of Hormuz?
Good morning. Yes, I think that's right. I mean, around 20% of global oil supply passes through the Strait of Hormuz. And yes, you can redirect some oil and you can release some oil from SPRs, but even today, you're probably looking at a 12 to 13 million barrel a day outage. And Iran has demonstrated it has an ability to close the strait. And so yes, I think you're right. I think into the medium term, you will see a bigger geopolitical premium in the oil price to account for that.
How much worse do you think the price shock would have been to oil markets had it not been for those land pipelines in the UAE and Saudi Arabia that have managed to reroute some of the oil from those countries?
Well, look, I think that you're possibly moving 4 maximum 5 million barrels a day again, getting sort of redirected through other pipelines, and then you perhaps got about maximum 3 million barrels a day of SPR release. So that is helping to mitigate things a little bit. But the reality is the size of this outage, I mentioned 12, 13 million barrels a day after those offsets.
For not having any of that,
Could have just over
reject it.
barrels a day. So
It's going back down.
10% deficit.
Nasdaq
You can't
is weaker, and SPX just broke the 50% level.
And ultimately, the way the physical market will balance is through demand destruction. And so, that means oil prices, or Brent oil prices, somewhere between 120 and 150 million, $150 a barrel. And at that level, consumers start to modify their behavior. And we've already sort of seen some example of airlines saying that they're going to close certain routes that are unprofitable. The IEA, the International Energy Agency, issued some advice telling consumers this is how you can modify your behavior to consume less oil. So the redirections help, but they don't fundamentally change the situation that we're in.
Yesterday, I noted that at Sierra Week, there was a lot of obviously conversation about the Strait of Hormuz, the war, but then also the wedge that's existing between the futures market and the physical market. And just looking at where Dubai crude is trading this morning, we're at $132 versus a Brent barrel of around $104. Do you think that the futures market will with the physical market at some point?
SPX is respecting the 50% level. Is just a pivot there.
Yeah, so the first one is
Nasdaq manipulating again.
Dislocation. So, the price of product is high. So jet fuel.
Get more aggressive buyers in. A bit more conviction to the upside, or
in the crude market, yes.
Will the bears hold this level? This is a critical level here. We've got to displace in either direction. Should just range and consolidate to build up more liquidity here before moving on. See here, more volatility.
Narrow a little bit,
Down a bit. Wait for some volatility to come in to see if ready to move again.
You've got very deep backwardation, which means the spot price is high, the future price is lower, and that kind of reflects the physical shortage. And whilst there's, understandably a lot of attention on what's going to happen to the spot price, as an equities investor, I'm equally as interested as what's going to happen to sort of the medium-term, mid-cycle oil price once all this is done. What does the new normal look like? And for various reasons, I think that you are going to see mid-cycle prices move up once we kind of reach a ceasefire and the Hormuz reopens again.
And how quickly do you think can oil prices normalize once the war is over?
Yeah, well, look, there's a few elements to that. Okay, so firstly, we need to kind of have a ceasefire, and then we need to get the barrels back. Now, in terms of a ceasefire, I don't claim to have a particular edge there, but I will probably take the over in terms of the timeline here. And my reason for thinking that is it takes two to tango. The Trump camp is clearly talking to someone in the Iranian camp, but there's likely to be sort of factionalization within Iran. So you need to convince everyone, or the majority of the leadership in Iran, that it makes sense to have a deal. And of course, every day that this drags on, the Iranian negotiation position gets a little bit stronger because we're drawing down global inventories quite quickly. And so it kind of makes sense for Iran to kind of drag this out for a little bit longer. And so, look, my best guess would be, it's another 3 to 4 weeks until an agreed ceasefire. And once you've got that, you've then got to get the barrels back. And, bear in mind that fields have been shut in, vessels are in the wrong place, workforces have been demobilized. So it's probably another 3 or 4 weeks to get back to a normal level.
Well, thank you for spelling it out for us so we get to chat and get your perspectives. Paul Gooden, Natural Resources Head at 91.
Okay, let's take a look at how equity markets are faring. Whipsaw price action yesterday. We saw Wall Street end in the green, but today cautiousness prevailing. Again, perhaps we are with this war. It is day 25. And yes, President Trump has hinted at discussions that are taking place, but yet to be confirmed by Iran, despite some of the very aggressive diplomatic channels that are being worked here. S&P futures down 0.6%. European markets down 0.9%. Coming up, we're going to be speaking to Miran Kamrava, professor of government at Georgetown University in Qatar, about President Trump's claims of talks with Iran to end the war. That's next. This is Bloomberg.
Peter Piper's pepper picking. Hey, so he ordered the supplies from Amazon business. Positive profit. Amazon business.
The level's holding strong. Still looks bullish to me, but let's see if I can get another entry. Just maybe one more try today.
And the second one is we are
Break evens. And I get the decent entry.
Good morning. This is Horizon's Middle East and Africa. Our top story this morning. President Trump says the U.S. will delay strikes on Iranian energy infrastructure after what he calls productive conversations. Direct talks have been denied by Iranian officials and state media. Oil rises, Asian stocks pair gains, and futures slide as fragile optimism around a potential de-escalation in the Middle East gives way to renewed caution. Plus, the war in Iran heads over the zero-week conference in Houston, with energy bosses sharing concerns about the impact on the industry. ADNOC CEO Sultan Jabbar calls Iran's weaponization of the Strait of Hormuz economic terrorism. It's just on 9:30 a.m. across the Emirates. I'm Monica Versace. Dubai, well, markets are leaning towards red. We had a positive pulse from Wall Street yesterday after President Trump's post talking about productive discussions with the Iranians that was subsequently denied by the Iranians. But what we do understand is that there has been indirect efforts to get the two sides to speak to each other. But whether that's going to yield anything over this next 5-day window, big question mark for markets. And I think this morning, perhaps we are trading with a bit more of a tone of cautiousness than we had yesterday around all of those headlines that are coming through from the U.S. administration and indeed from Iran as well. So S&P futures down about 0.8%. So declines we are seeing rising. We head into the European session. European markets also pointing to a negative close too, and it's an open too.
Well, we'll be back for the close. Just
When the
missed the entries.
not yesterday, we dropped more than double digits, but then have steadily reclined again. We're still $104 and effectively